So we have made 1% if we entered short at that aqua line, vertical line entry. So that's our first trade. We love um, the first profit, giving us 1%. Now let's see. Our second profit should give us okay. We are going to make here 2.5% when you do the math. So we have more downward movement for the second half of the first entry. Now for the second trade, we'll enter this particular line, this particular level. So if we enter here, our indicators tells us to go long. So yes, so we expect an upward movement, and clearly we will lock in here the first 1% of our account, and this 1% of our account will increase our account balance by 4.5%. So that's actually the second trade. So we are winning. Currently we have no loss. We have not lost any particular trade. So we continue our trading. So next we are going to find out how many percent the second half of the second trade is going to give us. So when we do the math, if you bring this here, let's move our ATR to the required level. So we have roughly it should be another 1%. So our account is going to grow by 1 by factor of 1 again. So we have a 6.3% account balance in our third trade. How cool is that? So as we go into the fourth trade, we will definitely lock in the first profit because price really goes in our way. Price goes our way. Goes. So we've got 1% more. That's our should be our fifth trade. So we enter the next trade here. Our indicators tells us to go south, to go short. And if we actually go short, we'll end up with some positive profit, some profits. And then we'll lock in our first 1%. That's when the first half of the trade, the take profit gets hit. So we'll lock in the first 1% there, and then the second half will exit there due to our indicators and make another 1.6%, and that will be the level where we'll exit in that bar above the moving average, which is this aqua line, this level, this vertical level. That is where we'll exit because of our indicators, and we are going to go long here, but it's a pity that we're going to lose 2% of our account because price definitely retraced after the first bar. So we'll just bear it and absorb the 2% lost, and our account will drop by that factor, and we'll have 8.4% left as account details. So if we continue, we'll stick to our model, our system, follow it religiously. We see that here also our indicators tells us to go short, but it turns out that price actually went against the prediction, and this will also lead to another 2% loss of our account. So we are going to absorb another 2% loss, and this 2% account loss will drop our account to 6.4%. So we'll bear it, we absorb our loss, and we stay our model. Normally it will have been good though if after I observed a first 2% loss, the next trade, if I entered the trade with half my normal risk, like 1% instead of 2%, our percent won't have lose like 2% further. This case, which has dropped our account really down. So here if there's this aqua vertical line, we have our indicators telling us to go long, and definitely that's another loss. So we have a 6% account loss in a row. That's 3 losses straight. In the normal evaluation account, I will have definitely, I will have still be in the game, because 6% loss, the overall drawdown is 12%, especially for my Forex fund. So here we have 2% loss, and we'll absorb it, and you see our account dropped to 4.4% when we are about 10.4%. We are now at 4.4%. If we could find a way to eliminate those losses, these would have been a far better result. But still, these results are good. So we'll go short here based on our indicators, and we'll definitely make a profit of 1%, which has grown our account to 5.4%. So then the second half will kick us off with a 3.3% profit. So you see our account just grew to 8.7%, which is a nice thing. At least we've made up for some of the losses we had recorded. Now at this particular level we wish to go long because our indicators of majority, most of them says we are to go long. So if we follow the crowd and say we enter a long order here, we'll definitely lock in our first profit of 1%, which is a good thing because the next candle there, which is this candle above the moving average, really goes very high. It's really high, and it's a very long candle, in such to say, and we'll end up really locking in that 1% of our account, which is about which will grow the account to 9.7%, which is a good thing. So we are at our seventh trade, and the second half will have definitely be kicked out at break even because we'll have moved our stop loss to the level of entry. Now if we move our aqua line to this particular vertical candle, our indicator tells to go short, and following the indicators we lock in a 1% of our account, which definitely increases our account back to 10.7%. So that's a good thing. Then the second half will kick us out with a profit of let's see, 1.1%. So we have a 12.8%. I mean 11.8%, my bad. So that's good. So we'll enter the next trade here, and if we move our the blue line, that helps us to figure out the value of the ATR, which is clearly 2200. We'll see that we need 2200 here, and this is the position where we lock in 1% of the account. So we have our first take profit getting hit. That means we'll have a growth of 12.8% so far, and the second half of this particular trade will be kicked off with at break even, and we'll end up at this particular level here with our indicators telling us to go short. So if we go short here, what happens? Now if we move short here, we'll see definitely that first candle doesn't really go anywhere. Then the second candle, really we have a very possible displacement from the initial position of this price, which is that entry point. Then in the third candle, it retraces back to the level we entered. So we have an approximately if we are losing, it will not be far, it will be very negligible, very small. So we'll have just exit that particular trade because our system asks us to do that. So if we exit it, we lock in that very, very small loss, and then plan to go long here based on our indicators. Are we going to make any profit? Definitely no. Price does not really continue long. Price shoots downwards. So you see, we are going to lock in a 2% loss here, which is bad, which will take down our account size to 10.8%. But so far so good. We're okay with what we have. So let's absorb our loss and move ahead. Now we'll enter here. Definitely, what does our indicators tells us? Everything's about to scream short, except the last that is inconclusive, almost inconclusive, but it actually says long. So we'll have followed the majority of our indicators that says short. We'll have gone short here, and we'll have definitely locked in the first 1%, because you see clearly that price goes right down. It goes really down. So this downward displacement of price permits us to make profit in the market, and this 1% lock in is a good thing. because it has taken back our account to 11.8%. So we just need 1 more percent of the account to come back to the initial state, which is 12.8%, which is approximately 30% of our account. So let's see what will happen. Where are we going to exit this particular second half? Based on our indicators, we'll have to exit at this level here, this candle that rests on the moving average, and measurement gives us a 1% profit there. So we have another 1% giving us a total of 12.8%, as said. See, this is the profit we'll make from this particular stage. Thank you for watching this particular session of backtesting. We definitely showed you how to make 13%. We've lost 4% of our accounts, like 4 trades. We lost 4 trades. We added to the number of wins we recorded. We recorded 10 wins. So we had 4 losses and 10 wins. When you sum these two, you definitely end up with, what's the value? Come on, I'm waiting. Say it. 14, of course. So we end up with 14 trades. So we have a total number of 14 trades in 3 months. Can you imagine? So we do the math. We see that gives us 71.4%. That's how effective our indicators is. So, and we ended up with a 12.8% of our account, which is a good thing.